everyone, John Henry here, slingshotfutures.com, and welcome to the Daily Market Mindset, where we take a look at the psychology behind the moves today so we can better understand it tomorrow. And today, we're taking a look at the gold futures. Now, gold is one of those markets that can be kind of an oddball sometimes. When you're getting some movement like we've been seeing over the last couple days, where it slows way down, the movement becomes a little bit choppy and inconsistent, or like on the 60-minute chart where you have a gargantuan gap lower, then it kind of balances out and then gaps down again. Whenever you have oddball movement like that, usually gold's at the forefront. It seems to be kind of its forte. Now, when we're looking at this, first of all, context is everything. We need to know what's going on with the market so we can kind of pinpoint what the traders are likely to be doing. And we can see here that over the last couple days, we've had a nice bullish rally going on, and the buyers seemingly have had a nice rally in the morning and then pulling back. A nice rally in the morning, pulling back. That has been consistent for a very long time. So when we come in today, we see a gap up again that's been consistent for the last several days. We're likely expecting a morning rally and then a correction back down again, because that's what it's been doing for the last week. So we have a gap up, and we start the move off to the upside. Now, in the room, we were talking about how this second candle of the day is a potential opportunity for long-term, to buy into the move, getting that morning rally, and kind of kicking things off. Now, I don't have it marked because I'm not a big fan of it. You're buying directly into weekly resistance, and the same thing goes with this. But for those of you who did end up taking that one, it was a really nice trade. But keep in mind, there's always a little bit of context involved. I'm not a big fan of trading directly into resistance myself, so that's why I skipped that one, but don't feel bad if you took it. I think it's a good trade. Now, when we start off this morning, we're looking for a reason to buy in. Now, we did arguably have one there and there, right? But again, you're buying directly into that weekly resistance. It's just a really tough situation to put yourself in. So I'd rather wait for the buyers to potentially feel like they're trapped, to trap in sellers, and then shove the market back up again. So we have a nice push higher here. We pull back, we attempt to use that weekly area of resistance as support now, and they pop higher. Now, obviously, this rally higher had a huge amount of profit taking in it. Otherwise, well, it wouldn't have that gargantuan wick on the top. This big candle is going to trap a lot of sellers in. A lot of sellers are going to look at that and think, oh man, finally, look at this candle. We can't resist that. We've got to jump on in. The same thing happened here. Really nice micro double top into a strong bear candle, immediately trapped. So that's what we're looking for. We have a big bear candle down. We're looking for them to get trapped in, and that's exactly what happened. They get trapped in, and the market shoves back up for a quick little test of a small little target. Now, that trap really didn't get very far because it failed to make a new high. And at that point, you're starting to think now, okay, well, every single day so far, we've had a gap up, continuation for a rally higher, and then a correction into the end of the day. So this might be the top of the move. We don't know yet, but it might be the top. So if that is the case, we're looking for possible failure from the buyers and then to switch gears into sell mode and start looking for that move down for the rest of the day. Now, we got a huge doji right here, and it turned down into a nice bear candle. Lots of wick on the bottom, though, and you're still struggling around that weekly area of support and resistance, so we got to wait for a little more info. A strong breakdown continues, and now we're a little far away to be jumping in, so we need a small little correction here. Good continuation. We pop up, one candle bounce, and that allows the sellers to drop it right back down and sell aggressively into it. Now, this is something that we bring up every once in a while. Look at the pressure of the bear candles. See this bear candle here, the middle one, and then the third one here, and see how there's a distance? If you look at the low of this candle here and the high of this candle here, see how there's a distance between those two? That is a good sign of pressure. You have a good amount of bullish pressure here. Not to mention the huge bear candle in the middle. Everything is showing that the market is pretty aggressively bearish, and it's at least likely to get one more leg down if it corrects. And that's exactly what happened. So a nice little sell move in to finish that leg off, and then it pops right back up. Now, that earlier area of resistance, it was support and then back to resistance again. We come back up and we miss it by a tick, start turning down. The buyers come in, but obvious that they don't have any conviction at all, given the look of that candle, and it turns right back down into a very strong bear candle, closing one tick off its lows. There are going to be a lot of sellers that jump in on that, expecting that afternoon correction to continue down, right? That's what we've been seeing all week. So a lot of sellers will be diving into that, and that is the next opportunity of the day to drive the market lower. Now, this one took a little while, right? It took a little while to get going. We had a nice bear drop. It corrected a little ways and then kind of dropped again. It just got a little choppy inside here. When it popped back up again, it had a very strong bull candle, that completely fell apart, right? This is the first time that they were able to get above the moving average in a really long time, right? You've got 5, 10, 15, 20, 25, 30 minutes. So for the first time in a half hour in a range, this is the first time that they've been able to get above the moving average, and as soon as they did, it immediately dropped right back down. We have another low, and that forms a triple bottom, a micro triple bottom, and it breaks out with a beautiful bear candle to kick off that continuation to the downside, and you can see the follow through. So just a phenomenal day of price action, and also using prior day's information to our advantage. Looking back over the past week and saying, you know what? This is a consistent pattern. It gaps up, has a morning rally, and then falls for the rest of the day. Gaps up, morning rally, falls for the rest of the day. We expect to see the same thing over and over and over again until it eventually fails, which it will at some point, but until it does, that's some useful information. So that's going to do it for this one. Hopefully you learned something. Hopefully you found it interesting, a little bit useful, and maybe a little entertaining. Until next time, we'll see you then.